Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst, and this is daily analytical report. So I will tell you and show you what's going on the markets. We do have a few interesting setups today. Most definitely, even that we have 4th of July, so we do have an Independence Day in the United States. American market is closed, volatility is a little bit lower, liquidity is lower. But still, in this environment, we do have nice trading occasions for you. Overnight, for example, we had in the morning and overnight, we had two central banks, Reserve Bank of Australia and Riksbank. Last week, many central banks were very hawkish. And there was an expectation that Reserve Bank of Australia also can have hawkish tone, but they failed to deliver hawkish statement. They didn't change the rates, and also they said that appreciation of Australian dollar, if it would be too strong, that would hurt economy. That was perceived as a dovish comment, and that is why Australian dollar is going down heavily. Let me show you the calendar before we will talk more about trading setups. Remember that always you have to check the calendar before going live on the markets, because even if you're using only technical analysis, you need to know when not to enter the position, because even when you're using technical analysis, those trading setups can be easily destroyed by release of macro data. Price can come back to the same place after 40 minutes or 1 hour, but your moment of entry can be completely destroyed. So better know when you should enter, or if you should, for example, leave this trading occasion for the next day. As you can see, interest rate decision in the morning. We do have as for today, we do have two ECB members. They're gonna talk. We'll see if any significant things. If we will see any significant things, but as for today, that's it, because again, American market is closed. On Wednesday, non-monetary policy meeting of ECB, minutes from FOMC and factory orders. This influential data, also PMIs from China and Eurozone. So we can say that tomorrow we should have some nice movements. Okay, let me show you the charts right now. First, yes, we can start with the dollar index. I didn't show you dollar index before. But if you're trading on pairs with American dollar, it would be nice to check that from time to time to see what's the potential for the American dollar to go up or down. Up or down. So what's happening on American dollar is at the end of June, in the second half of the June, we got a beautiful head and shoulder formation, right? Then the neckline was broken here, the price fell sharply, and at the end of the June, at the very end of the June, in the last day, they created an inverse head and shoulder formation, left shoulder, head and right shoulder, which indicated the possibility of a pause here and a start of a correction. And this correction is happening. We were writing about that yesterday, somewhere here, that there is a possibility that the dollar index will climb higher, and it is climbing higher, and we estimated the first resistance around here, and as you can see, we stopped exactly here. And so dollar index is moving very technically. It looks like dollar will be a little bit stronger in maybe today and tomorrow, because they still didn't touch this resistance. They are around here, but I would love to see a price advancing a little bit higher, and then kind of a reversal pattern, and then a new downswing. But from analyzing the dollar index, it looks like dollar should be a little bit stronger in the short term. That would go along with euro to American dollar. I see an interesting situation here, because look, on a daily chart, what's happening on a daily chart, that's a head and shoulder formation. Left shoulder, head and a right shoulder. And here we do have a neckline. Neckline which was broken yesterday, and this triggered a sell signal. So there is still a sell signal on the market right now. The potential target is not 54 pips like here, but I think that the potential target for this movement is here, and let me explain you why. Because here in this place I can see a combination of three different technical factors, which gives us a very strong, potentially a very strong support. So first, a technical factor that should support the price here are trend lines, mid-term and long-term, right? Those two blue lines are around here. Then you have a correction equality pattern. Actually, I would like to check if exactly. We do have a correction equality pattern here, here, and here, which would end up exactly here. Those corrections are, let me check, around 180 pips, 75. 175 pips, 175 pips. Yes, exactly. And then we do have a horizontal support created by those tops from the beginning of June, from the first half of the June. It was later tested here, and maybe it will be tested here. So this white, I would say that we have area this big, which is around 40 pips, 38 pips, where the price can bounce. So somewhere here I will be waiting, watching the price movements carefully, and I will be anticipating a bullish reversal pattern. If I won't get any, I won't enter the with the long position. But if I will get a bullish reversal pattern here, I will try to trade it, and I will try to open a long position here, which will have a great risk to reward ratio, and potentially that can be a very, very good trade. Let's see the situation on Australian dollar to American dollar, because we got interesting movement overnight. Overnight, yes. Here, almost 100 pips, which was a reaction on dovish Reserve Bank of Australia. But that was also a combination of technical factor, because look at that. On Friday we bounced exactly from this line, upper red line, which is connecting recent lower highs since the April 2014, and then we got a nice sell signal. Obviously it was a little bit risky to enter the market without a proper with this signal, knowing that we'll have a Reserve Bank of Australia on Tuesday, but this time technical analysis came along with fundamentals. So fundamentals just proved the technical signal, which was created 2 days before. That's very interesting. And as you can see, Nice reversal here. We broke the horizontal support here on 0.7625. Currently this orange area will be the closest resistance, and this one is not relevant, and the closest support will be this blue line. Once the blue line will be broken, that will open a way to the lower red line. Okay, now let's analyze the instrument which was usually nicely correlated, highly correlated with Australian dollar to American dollar, which is gold, but this correlation is a little bit broken lately, because here we do have a very strong signal. Very strong sell signal was created yesterday. Why is that? Because we broke the neckline of this head and shoulder formation, left shoulder, head and right shoulder. And not only the neckline here, but look, a few days before we broke the uptrend line. Yesterday we broke also the horizontal support here, which on H4 looks better. So we broke this horizontal support, we broke the neckline, and this triggers a sell signal. The most probable scenario is now a kind of a correction and then continuation of this movement. It depends if this upswing will be this big, this big, this big, this big, or this big. But at the end of the day, what it counts is that there is a bearish sentiment here, and we should come back to the downswing, and we should see new lows here. And this statement is coming from a gold bull, right? I was very positive about gold. So even if a gold bull is telling you that the chances for a downswing are higher than for the upswing, it means that something is going under. American dollar to Polish zloty, they are defending this horizontal support very bravely. 370, they tried once, they are trying for the second time. So far so good if you're looking for a reversal trade. I'm a trend follower, but if you like reversal trades before because you're enjoying a huge risk to reward ratios, so by entering here and having a short stop loss, you're trying to catch a movement, at least here for example. If you're looking for trades like that, this setup is kind of interesting. I don't want to say it's very strong, because it is I saw stronger, but definitely it's worth considering. Next instrument, also where the correction on American dollar happened not by accident, is British pound to American dollar, because this correction happened exactly on a horizontal resistance. It's we do have a cable here. So after this upswing, they are trying to correct this movement. I said last week that it wouldn't be surprised if they use this upper line of the wedge formation as a closest support. So even if the price will get here, that wouldn't change my bullish view on cable. Price re-entering to the wedge and breaking this pink support would change my view. It wouldn't be no longer bullish. American dollar to Japanese yen just defended a buy signal here. So buy signal was created when the price broke this upper line connecting recent lower highs, right? So we got a nice upswing, then a reversal, and the reversal targeted this line as a closest support. That's a very strong upswing. Here we got a confirmation of the bullish intentions here. Let me draw a trend line. So yeah, the situation is bullish. We in the long term, but in the short term as well. Looks very, very positive. Euro to British pound, they are trying to defend this horizontal support. We will see if they will manage to do that. So far, there's no trading signal here yet. American dollar to Mexican peso, it's good that I closed my short position here because the price is advancing higher. So and to remind you, I had a short position somewhere there and I closed that here. I missed this movement, but still I would be on zero right now, so it wouldn't be the best. But currently it's kind of a double bottom formation, and every bottom from that double bottom formation is also made by two bottoms. It's interesting. As long as we stay below the blue line, the sentiment is negative, but this setup, this price action indicates that this resistance can be broken. American dollar to Japanese yen, and the party goes on here. Nothing bad can happen. All looks very positive. And silver also, they were defending bravely. Here they try to create, well, they created a hammer, and the second one is not exactly the hammer, but it has a longer tail than a head, and it was on a long-term uptrend line, but they went down along with gold. And actually, well, I was telling you that this trend line is the last support, but we're having ultimate last support, which is this horizontal one. Price should get there soon, and here we'll have a real test of the sentiment. I think if this support will be broken, that will be the end of gold and silver for 2017. That would trigger a strong sell-off on precious metals, in my opinion. The next one is Australian dollar to Japanese yen. We got a correction, and it didn't happen on a place which could not be expected. As you can see, that's just a long-term resistance. On a daily chart, sellers are fighting for bearish engulfing, but the thing here is that Australian dollar is weak because of this statement, but Japanese yen is also weak. So it's not the best idea to enter the market, enter the pair with two weak currencies and try to go long with one of them, or with one of them. No, it would be much wiser to buy strong currency and sell weak currency. And here we have two weak currencies, so I wouldn't advise you to buy Australian dollar. New Zealand dollar to Japanese yen. Here I'm waiting patiently for the past few weeks, as you can see, past few bullish weeks. Breakout of this horizontal resistance can be very positive for this pair and can trigger long-term buy signal, which is, by the way, already present but without me. A British pound to Japanese yen after 1, 2, 3, 4, 5, 6, 7, 8, 9 bullish days in a row. Maybe it's time for a correction, but nobody should be worried. As long as we stay above this horizontal support, sentiment is positive. Even after that, it will be positive, but it will mean that we are undergoing a bigger correction. So far, those corrections are muted, small. So that would be price bouncing from this horizontal support would be just a natural continuation of a very positive sentiment here. American dollar to Canadian dollar, well, maybe they are not bouncing from this support, but at least they paused here. That's not actually a proper bounce. What it is pennant. Pennant is a trend continuation pattern. So what we should see here, or pennant or a flag. So we should see here a breakout and a downswing. Actually, it's not a bad idea for a sell stop order here. Technically it looks decent. We do have a strong support in theory, but it doesn't work. So if the price does not want to go up, it will probably go down. Downswing could be also supported by the technical situation in the mid-term and short term, where we do have a nice downtrend post with trend continuation patterns, and they worked, and it is very probable that they will keep working. And now three instruments. From my other account, we do have a WTI oil, and yes, the price went significantly higher and reached the first potential resistance. And as you can see, we do have a not a bounce, but at least a pause here. So they are waiting for the further development. Why we do have a stop here is 50% of retracement of the recent downswing, horizontal support created by those lows from the beginning of June, and also from the highs from 12th of June. So that's not naturally a first resistance. If it will be broken, the next one will be moved to 61.8 Fibonacci, but also support resistance here, support, after breakout, resistance. And the last one, if this one will be breached as well, is on a long-term downtrend line and on a correction equality pattern. We do not have Fibos left here, but this trend line and a correction equality pattern should be fine without that. So that correction would be the same as this one. Next, S&P 500. Not very interesting situation here, unfortunately. Above the support, below the resistance, horizontal one, exactly in the middle. I absolutely hate it when the price is in the middle between important supports and resistances. It's absolutely not for me. I would say it's just 50-50 if the price will go up or down. So you're trying to base on luck, which shouldn't take place when trading. When you're trading, should base on your analysis, on your mind, and on probabilities. And here, when the price is exactly in the middle between horizontal support and resistance, probability for an upswing and for the downswing are equal. So it's not a good environment to trade, simple as that. And DAX. So DAX defended this horizontal support. It depends if we will use the shadows. They came back. If we won't use shadows but bodies, they are still below the trend line. So that's kind of an important difference for the technical situation. But what I would say, what's happening here, so they bounced from this horizontal support, and now the price is aiming horizontal resistance here, labeled with the green color. And it's also not very interesting for trend followers, because it's kind of a sideways trend. And we are again exactly in the middle between important horizontal resistance and important horizontal support. Again, As I said, it's not the best time to trade. Mostly in those kind of setups, people are losing money, not earning money. And you should be earning money, not going in those kinds of setups. So when scanning the market again, you can see it's 4th of July, right? And we're approaching American session because the market is frozen. Even if I will refresh instruments, you'll see that the market is more or less frozen. That's just specific of the forex market. When you have such important holidays in such an important country, you get that. Oh, for example, in December, in the last 2 weeks of trading, that's how every day looks like. Okay, my friends, thanks very much for attending daily analytical report. I hope you like those setups and you will keep eye on them. Remember, if you want more, we do have more. You just have to visit our Twitter account and our website, alpari.news. Thanks very much and goodbye.